if you are trading the boom and crash indices, this way you will never go broke again. You're going to get more profits than losses on your trade. All right, you're going to get more profits than losses. Now I'm going to share with you guys, the step-by-step, analysis on how you can trade boom and crash indices successfully, and you'll be able to gain profits on the market, and also some strategies that you can also use as well. All right, now we are on the crash 1000 index market right now. All right, and take a look at this point right now. If you observe that the market from this point, from the oversold, the market bought up to the overbought, it went upwards to the overbought region. Then when it got to that point, the market retested for a sell. It went downwards again. Now this tells you that this market follows a straight pattern, going upwards and downwards, going to the overbought, straight downwards to the oversold. This market always follow the same pattern all over again. But when the market is going like this, it does not mean that the market will just go upwards to the overbought for a straight buy position. No. In that road, when the market is going down that road, all right, there's going to be a break. There's going to be a break in structure, and that break in structure means the market is going to sell. Then it will now start again for a buy. It will sell. It will now start again for a buy. It's just like when you're moving in a road that is not good, a road whereby there are some hole on the road. You know that you have been in a journey in a road whereby the road is not good and the car won't be stable and smooth on the road. That is how this trading is. You can see that from here down to the but the road was not smooth. You can see that it bought smoothly, then there was a breakout for a sell. It bought again, there was a sell. Just like that, you can see how the road is not stable. But this does not mean that you will not get to that destination, right? This does not mean that the market will not get to that destination, which is the overbought. So you can see that the market eventually went to the overbought, even though the road is not smooth. So I hope you understand what I'm saying using this explanation. I'm explaining this to you so that you'll be able to get what I'm telling you the right way. All right, now this is what you need to understand. This is the 1 minute time frame, and the 1 hour time frame tends to control the lower time frame. Now I'll go over to the 1 hour time frame and see. You can see that even on the 1 hour time frame, the market, the road is not still stable, which is the trend line is not still stable. It's not straight forward. There's still break in structure of the trend line. You can see that right now the market is at the overbought. The market is at the overbought right now, and it dropped for a sell. It bought again, it dropped for a sell. Now what does this mean? This means that this market is going towards the downward trend. This market is going towards this downward trend right now. But what will happen in this point in time, once the market sell a little bit, it's going to buy. Let me show you the structure this market is going to follow, so that you can get the idea on how you can place a buy or a sell in this point in time. When the market sell up to this point, it's going to buy, just like this. All right, then when the market buy like that, it's going to resell again, going towards the downward trend like this. All right, like this. So you can see when it sell, it's going to buy. It's going to sell, it's going to buy. It's going to sell, it's going to buy, going towards the downward trend. You can see the market sold, it buy. It sold, it bought. You can see. Now what does this mean? That this market is going towards the downward trend, so there's going to be a very long spike on the market on the 1 minute time frame. If you are trading on the 1 minute time frame, so there's going to be a lot of sell in this point in time on the market. There's going to be multiple sales, so you at this point you want to be looking for a sell entry position, not a buy. Whenever the market is at the overbought on the 1 hour time frame, on the 1 minute time frame, if you are scalping the market, you want to look for a possible sell entry, not a buy. If you want to take a buy, your buy should not pass 5 candlesticks, because since the market position is going towards the downward trend, the market is going to sell a lot. So you are going to be looking for a sell entry. But if you want to scalp the market, taking advantage of small price movement, then you're going to be taking 5 candlesticks. You can even minimize it. You can even, lower it to 4 candlesticks to be safe on this market. And remember that the lot size play a great role in this market. All right, the lot size will determine how much profit and loss you will get on the market. Now, when you're trading like this, using this type of analysis, you will never ever go broke again, because if you are trading like this perfectly, you won't go broke. Although the market will tend to go against you sometimes, not all the time the market will go in your favor, but with proper analysis, the losses that there's going to be a loss in the market, yes, but those losses are going to be small losses, because you are going to be using extremely low risk management technique, and proper analysis to trade this market, so that you'll be able to get more profit than your losses. Because the more profit you have, that's your good advantage, because the more profit than your losses, you're going to be still making more profit. Let's say in a trade you make $20 profit and you lost $5. That is $15 you have gained on that trade entry. So for every $20 you make, you lost $5. For every $20 you make, you lose $5, and those $5 that you're losing is from the profits and not from your capital. Let's say you got over 50 candlesticks, or let's say you got over, let's make it more realistic, right? You got 20 candlesticks for a buy, and a sell came into the market before you could exit the trade, and that spike that came in for a sell took 5 candlesticks. The remaining candlesticks you have got is 15 as your profits. So that's the same thing that I'm talking about here. Even though there are going to be some losses on the trade, we are still going to make profit as well. Now, remember that proper analysis makes a very good role in this strategy. You go over to the 1 hour time frame, you observe the historical trends. Once the market have gotten to the overbought, know that market will go towards the downward trend to the oversold eventually. So you are going to be looking for a possible sell entry on the crash market. But if you want to take a buy, take only 4 to 5 candlesticks. And before you place a buy, it's going to be a very good opportunity whereby the chances of the spike coming into the market is very small. I hope you understand what I've said to you guys. Now let's go over to the boom market. The boom 1000 index. All right, the bull market at this point in time, we're looking at the market chart right here. Let's first of all observe the 1 hour time frame. The 1 hour time frame, we can see that the market is towards this position right now and is going towards the downward trend. The market is going towards the downward trend. So this means that this market is going to sell until it has gotten to the oversold for it to reverse upwards to the overbought. And if we zoom in a little bit in the market, you can see that even after the market sold, it bought a little bit. It sold, it bought a little bit. It sold, just like I explained earlier on the crash market. When the market buy, it will sell a little bit. It buy, it will sell a little bit, right? All right. Now the market has gotten to this point in time. So the next step right here, if you can see that the market have already, bought a little bit. So we're looking for another sell again towards the downward trend. If I put on the moving average right here, the moving average right here is showing us that this market, the trend line is going towards the upward trend. So what does this mean to you? Is that, take a look, the market is going like this it will curve downwards back. A lot of people, let me say a lot of traders, do not understand how the moving average works. Take a look here. You can see that the moving average went upwards, even telling traders that it's going upwards. Then if you look at it, it curved downwards, going back to the downward trend. It's going upwards again. It will eventually curve back downwards. Here it went upwards, it curved downwards, went upwards, it curved downwards. All right, even though at this point whereby it curved downwards and retested upwards, the market still got to the oversold. So do not be confused that even though the moving average is going towards the upward trend, that does not mean that that's the position whereby the market is going. Because if you take a look at this point here, even when the moving average got to this point, you can see that it curved downwards here. The market still got to the oversold, even towards this point here. So don't be confused with this indicator, which is the moving average. All you need is proper analysis, technical analysis, and you should be okay on the market. All right. So now what you do right here is go over to the 1 minute time frame. The 1 minute time frame, at this point on the 1 minute time frame, you can see that the market is still going towards the downward trend. Sold, there was a buy. It sold, there was a buy. It sold, it's going to be a buy. Then it will sell. So you look for a possible sell entry position, and that sell entry should be 4 to 5 candlesticks as well. Whenever there is a good opportunity for a sell on the bull market, your candlesticks should not pass 5. Do not be, do not hold on the market too long, because you want to make sure that you make profits and you want to make sure that you have patience. Do not look for that long term holding the market to gain more profits. That is when the market will go against you. The market will go against you because sometimes the market will tend to want to confuse you and trick you. The market, you see that if you're on the bull market, the market will sell for a very long period of time without a spike coming into the market, and you'll be like, oh, I wish I have stayed in this market. I would have been able to gain more profit. That is the market tricking you to hold on on the next price movement when you place an entry for a sell. Then when you have placed in an entry for a sell and you are in that market for too long, the spike will come in immediately, a very long spike that will take away all the profits and you will end up blowing up your account. So do not take more than 5 candles. That's what I do. I don't take more than 5 on the market. I use a reasonable amount of lot size. The one that I know that I can use properly, that's the one I use, and that's what made me profit. All right, so I hope after using this strategy and understanding this strategy, you will never go broke when you are trading on the boom and crash indices. There's going to be a losses, yes, but your profit is going to be more than your losses. Remember, using a low risk management technique is the number one key, and also patience as well. If you found value, do it to like and subscribe. I will see you guys on the next video.